With the last recapitalization of Nigeria's insurance sector taking place in 2007, there's a growing consensus that the sector needs a significant boost to remain competitive. The Senate's Nigeria Insurance Industry Reform Bill 2024 outlines substantial increases in minimum capital requirements for various insurance categories. However, there are concerns about the potential impact of these changes, including barriers to entry and the potential for foreign investors to gain a stronger foothold. Do these fears compare to the benefit of recapitalizing the insurance sector in Nigeria? Peter Offiong, Assistant General Manager, Standard SCIB, that's Scib Nigeria, joins me for this. Thank you so much for joining me.
Thank you, Peter, for having me.
All right, thank you. Now, the last recapitalization of the industry, which was done in 2007, is now 17 years old. And, there is no gainsaying that the value of local insurance is gradually diminishing in the face of Naira depreciation and devaluation. Hence, the calls by several industry watchers for the recapitalization of Nigeria's insurance sector. What do you make of this?
Okay, let me start by a small disclaimer that the opinions I express here are purely my opinions. They do not represent the opinion of the company I work with. That simply my opinion as a Nigerian citizen, as a chartered insurance practitioner, and of course as a chartered accountant. So, these are the basis of my opinion. Yes, clearly, it's been a number of years since the industry had some form of recapitalization. But I think that perhaps what we need to look at is more from a risk-based regulation or risk-based system, which is what we have conventionally and in most places abroad. I think this is best practice rather than having fixed capital. So yes, the industry reform bill has a lot of lofty goals and ideas, which I think will help drive the industry in the right direction. But I think on this matter of capital, yes, risk-based regulation has been introduced in the bill for the first time, which is a positive thing. I think in driving it and the practicality of it, we need to move away from fixed capital. So the idea of having fixed amount and then having risk-based really does not help, because ultimately, anytime you have a risk-based regulation, you're going to be looking at the higher of the risk-based, meaning that if you have a certain minimum capital, it doesn't really matter if it is 1 billion, if it is even 500 million. When you're being looked at from a risk-based perspective, it is whatever capital you have from that risk-based perspective that should work, because you should have enough capital to cover the businesses that you underwrite, and that's the risk-based capital model. So for me, recapitalization is required, but to the extent of applying the risk-based regulation.
Well, when you talk about this, I'm wondering, are you saying that we do not need to put a cap? For example, where they're saying, okay, for some sort of businesses, if you're doing reinsurance, you're supposed to have a particular amount of money. If what you're doing is life insurance, you're supposed to have a particular amount of money. Is that what you think should be done, or you feel that no? I mean, every company should have its own capital requirements. Is that what you're saying? Let's understand what you're saying, please.
So what I'm saying essentially is that it is needless to increase the capital from the 2 billion, the 5 billion, and the 10 billion to what we now have 15 billion, 25 billion, 45 billion proposed in the Act. And why I say it is needless is because you're already transitioning to a risk-based regulation. The new Act or the new bill proposes a risk-based regulation. And if you're dealing with a risk-based regulation, you do not need a fixed capital. So having a fixed capital and having risk-based at the same time, trying to increase the capital and then dealing with risk-based really does not make, it's not logical. And also, the amount that we are looking at is really outrageous, because if you look at the amounts being proposed, it will make Nigeria the most expensive country in the world to have an insurance company. And just to put that in perspective, the amount being asked, say for instance, a general business, you're being asked to bring 25 billion naira. If you take that to dollars, that's about maybe $32 million. Now, with $32 million, I can tell you that you can have insurance companies in 5 different countries in the world. You can have an insurance company in the UK for £3.2 million. You can have an insurance company in Germany for 3.7 million euro. You can have in France for 3.7 million euro, in US for $2 million, in Canada for $3.7 million. And ultimately, what I'm saying is that you can have insurance companies in these 5 countries of the world for less than 20 million.
But Peter, I'd like you to put this in perspective. When you look at the currencies we're looking at now, I understand when we translate it to dollars, maybe it looks very huge and all of that. But maybe because we have a weaker currency, don't you think that's what's also contributing to the fact that when this amount is translated into other currencies, that it feels like it's huge compared to what we're doing?
So I think the question of a weaker currency is even irrelevant, because what I did not compare Naira with those currencies. I compared dollars with those currencies, right? I converted the 25 billion to dollar just to see that it is outrageous, right? And if you do not need more than 3.2 million pounds to set up an insurance company in the UK, why do you need that in Nigeria, for instance? So I'm saying that it's not about our currency being weak. It's just about not getting the priority right in terms of how we should move forward. I believe strongly that bringing the risk-based regulation into the act is a good thing, is a lofty thing, and that is what we should pursue, not to start raising the capital itself, because it's going to make us unattractive. It means that an investor that wants to come in from outside Nigeria will have to think twice, really, because why do you want to bring 25 billion naira into the Nigerian market? Which is about $32 million. Like I said, you can spend less than that amount to get insurance companies in 5 different countries of the world. So it's really not it's not a strategic thing to do. That's what I'm saying.
Quite interesting there. But then there are also concerns in some quarters, apart from what you've talked about, that this exercise might introduce fresh barriers to entry in the sector, and that local investors might lose their stakes in existing insurance firms to their foreign counterparts. I think you've made the first point about, discouraging new entrants and all of that. But is this really something to be worried about? Do these concerns outweigh the supposed benefits of recapitalizing the sector?
Yeah, so I mean, like I said, I'm an advocate for recapitalization, but like I said, it's just about getting it right. What exactly are we doing? From an investor point of view, certainly there'll be dilution of shares, because if you're moving from, say, 2 billion to 15 billion, you're looking at additional 13 billion. So whoever is bringing that money in definitely is going to dilute your existing ownership. So there will be dilution of ownership. And if the money is coming in locally, well, good. If it's coming from outside the country, it therefore means that you're going to have a lot of those stakes directly or indirectly going outside of the country. So yes, there'll be dilution from the investor's point of view. And clearly it will be a barrier because, like I just made mention, and comparing this with the rest of the world, we are going to be the most expensive place in the world to do insurance business, essentially. And that would really is going to be a huge barrier. It means that for anybody who wants to think of coming to Nigeria to invest in an insurance institution, such a person has to think twice, because he could have as well used that money elsewhere and probably has a lot more money left.
Well, looking at what you have proposed, I'm just wondering, so you're looking at a situation where NICOM probably starts grading maybe every insurance company, maybe a company is told to raise a particular amount and another company is told to raise a particular amount. I'm just wondering how you want that to work, really. How is that going to work? So we have an industry where there is no uniformity. We're not saying, okay, those in life, they are probably supposed to raise a particular capital, and those in general or composite are supposed to raise it. I mean, does that mean that you're looking at a situation where every company has its own capital? How then do we ensure fairness and all of that, fairness actually in the sector?
That is really the idea of a risk-based regulation. Risk-based regulation is simply saying you must have the capital required to do the business that you want to do. So it is not compulsory for every insurance company to do all manners of insurance products or sell all manners of insurance products. You can choose as an insurer to sell only motor insurance. Another person can choose to sell only fire insurance, because your capital can only allow you to underwrite fire or underwrite motor, as the case may be. And that is what you find elsewhere in the world. And like I said, this is where everybody has transited to, and which is also why even the act itself has said, or the bill itself has proposed risk-based regulation. And for me, if you have proposed risk-based regulation, that is what risk-based is about. It's about having capital that suits the business that you do. So if you want to do a business that requires you to use 25 billion, then have 25 billion. If you want to do a business that requires you to use 1 billion, then have 1 billion. So at the end of the day, everybody will not have the same level of capital. And that is the concept of risk-based regulation. And it's a universal concept. So it's not just applicable in Nigeria. It's been applicable in a couple of other countries. In the whole of Europe, that's what it's been applied. In the UK, in the US, it's been applied. In Canada, in South Africa, in Kenya. So Nigeria is not an exception. If we want to go in that route, let's just do it, and not a situation where we say let's do risk-based and then let's have a minimum capital. It defeats the purpose, because if as an insurer your appetite is to do a business that requires you to have 5 billion naira, then why do you need 15 billion? It's a waste of resources.
Right. Now, what's your assessment of the sector's current capital base? Robust enough to take on risks in all sectors of the economy? Because when we look at insurance in Nigeria, we know that the penetration is very low, less than 1%. So do you think, as it is, as the sector is now, do we have enough capital to drive, some of the things we want to see? Take on more risks?
Yeah, so I would answer that from two perspectives. And I will start by saying that the industry is robust to deal with a lot of the risks that it carries at the moment. And why do I say so? I mean, the statistics speaks for itself. Last year, the industry paid claims worth 536 billion naira, right? So if the industry paid claims worth 536 billion naira, it means it has capacity. By Q1 of this year, the industry has already paid claims worth about 141 billion. Now, when it comes to insurance, capacity is not just about capital. So the capital that you have is not to use it to pay claims. The fact that you have 2 billion, 3 billion capital, it's not what you use to pay claims. What you really use to pay claims is a function of the premium that you have received, and of course, your reinsurance capacity. So that is where the reinsurance capacity comes in. And oftentimes when we talk about even this recapitalization and all of that, we tend to think of insurance from the same angle as a bank. It's not the same dynamics, because insurance relies on reinsurance. So the question is, where is the role of that reinsurance? Where is the reinsurance capacity? That is really what you need when you're paying claims. You're dealing with all of that. So to a great extent, yes, the industry has that. But do we need more? Yes, we do, because for us to move to where we need to move to as an industry, to be able to take on more emerging risks like cyber risks and the rest of them, we need, of course, more robust capital, right? And which is why I said risk-based. So if as an insurer you say, I want to be a specialist in terrorism, in cyber insurance, then have the capital that will require you to do that. So yes, the industry has, as it is today, the industry is solid, because again, like I said, the industry is paying this amount of claims, and it therefore means that yes, we are doing well in that regard. But yet, do we need more capital? Like I said, it would then be a function of the business model that you want to drive as a company.
Well, let's come to the challenges hindering insurance penetration in the country. While we cannot deny the strong cultural bias against the concept of insurance, I'd like you to talk to us about other factors responsible for this.
Okay, so the factors are enormous. I mean, we have on both sides, we have what we may call the supply side of it, the demand side of it. You just mentioned the issue of culture, issue of religion, bias, and so on and so forth. I think one of the key things really is low awareness and financial literacy. A lot of Nigerians, when it comes to financial literacy, I think you would score us very low as a country. Now, when you then deal with financial literacy, people begin to talk about, okay, savings, and then they talk about some level of intermediation. So you talk about credit before you now even move to insurance, because you must have done savings, credit, investment before you move to insurance, which is like at the other end. A lot of people really don't get to understand. So I think low awareness, financial literacy is a major problem. The second issue is economic constraints. I mean, the level of poverty in Nigeria is high, and we can't deny that. In recent times, there's been a lot of hardship on the economic front. Now, all of these things means that what people have in terms of the purchasing power is reduced. What they can, and sometimes people see insurance as luxury. Insurance is not luxury anyway, but sometimes people want to prioritize. You want to eat food first, you want to have accommodation, you want to have clothes to wear before you then begin to look at insurance. So whatever happens at the macroeconomic level has implications on insurance. Of course, there's the issue of cultural and religious belief, which you said. And I think for me, really education will help people move away from these things, because your pastor, your imam has insurance. You know, the churches you go to, the mosques you go to, some of them have insurance. So why then do you believe that because you have the blood of Jesus, you don't need insurance? I mean, I'm a Christian, tongue speaking, right? But then I have insurance. Okay. Now, there's the issue of trust as well. And the issue of trust comes from maybe past experiences where people have had delays with their insurances and all that. And for some of them, what they have heard other people say, I mean, they may even have experienced these things by themselves. So there's some of those gaps. Of course, there's the issue of product itself. There's limited product range. Sometimes distribution channel could be a problem. And there are a few regulatory issues as well that could be an hindrance to some of these things. So,
all right, thank you. Thank you so much, Peter Offiong, Assistant General Manager, Scib Nigeria Co. Thank you for your thoughts and your time on the show today. It's been a pleasure speaking with you.
Thank you. Thank you for having me.